Hello and welcome to Byjus Exam Prep IAS. Welcome to Knowledge Series, and in today's video, let's have a discussion on one of the very important concepts for UPSC examination, that is the concept of government budgeting. Now, before I enter into the details of government budgeting, here are certain very important pointers. First and foremost, the term budget is not mentioned in the Constitution. I repeat, the term budget is not mentioned in the Constitution of India. Rather than budget, the term that is actually mentioned in the Constitution is Annual Financial Statement, AFS, Annual Financial Statement. Second very important point, until very recently, Government of India used to present two budgets. One was railway budget and the second one was union budget. But Government of India, citing many reasons, has discontinued a separate railway budget. I repeat, has discontinued a separate railway budget. Rather than having a separate railway budget, now this has been merged, subsumed under the concept of union budget itself. Third very important point, because the term budget is not mentioned in the Constitution of India, there are no compulsions with respect to when the budget has to be presented, at what time it has to be presented by the government. Until very recently, government was actually presenting the budget on the last working day of February. Now this has been preponed to 1st February every year. For example, next, assume in the next year, calendar year by the way, 1st February is a working day. If it is a working day, that is first day in the February, which is a working day, the government shall present the budget in the parliament. Some of you will basically say, sir, what if first is a holiday, first is a Sunday, etc. Then whichever is the first working day of February, government shall present the budget on that particular day. Next, fourth very important point, irrespective of whether the finance minister is from Lok Sabha or Raj Sabha, doesn't matter. It will be the finance minister who shall present the budget on the floor of Lok Sabha. Done? So these are four very important points. Some of you might be thinking, sir, why does the government even need to present a budget? I don't think government should have all the powers to spend money, to collect money. Not necessary. Understand this very carefully. There is a fund in the polity or into the Constitution which has been mentioned in the Constitution of India, Consolidated Fund of India, CFI, Consolidated Fund of India. Now, if the government of India wants to spend money, right, let's say they want to launch a new welfare scheme, they will require money for it. From where does the government get this particular money from? They will have to withdraw the funds from CFI. And the Constitution basically says that Government of India, even if they want to withdraw a single rupee from the Consolidated Fund of India, they will have to seek the prior approval of the Parliament. I'll repeat the statement here. If the government wants to withdraw even a single rupee from the Consolidated Fund of India, they will have to take the prior approval of the Parliament. And that is the precise reason whenever you talk about budget, government will be submitting lot of documents during a budget session. For example, government will present documents by the name of appropriation bill. They will also present a document, finance bill. They will present FRBM document, etc. Again, there are more than 10 types of documents. I am focusing on the most important ones. Appropriation bill basically deals with the amount of expenditure that the government will incur by withdrawing the funds from Consolidated Fund of India. I will repeat it again. The appropriation bill basically consists of the funds that will be spent by Government of India in terms of expenditures. But these particular expenditures have to be withdrawn from Consolidated Fund of India. Hence, they will introduce a bill and get the bill passed, then they will be allowed to withdraw the funds. Having said so, before you think, sir, right, there is a correction here. Let me make the correction, or let me tell you a certain exception here. Whenever you talk about expenditure incurred by the government, there are certain types of expenditures which the government will incur indirectly. Not directly but indirectly. Let's say Government of India will spend more than 2 lakh crore rupees in the form of food subsidy through Food Corporation of India. In this regards, government may not withdraw all the 2 lakh crore rupees from the consolidated fund of India. Government, just a hypothetical number here, will withdraw 1 lakh crore rupees from consolidated fund of India, and remaining 1 lakh crore rupees, government will simply ask the Food Corporation of India to borrow from the market, to raise the money from the market, to borrow from the market. So whenever such type of borrowings are done, not directly by the government, but by the government owned entities or agencies on behalf of the government doesn't have to take the approval of the parliament. But these particular types of borrowings or these kind of activities, there's a separate name for this. This is referred to as off-budget borrowing or off-budget expenditures. So these are certain very important points. Now some of you will simply say that, sir, you did not tell anything about finance bill. You did not say anything about FRBM document. Finance bill, understand this. Whenever the budget is presented, please have a look at it. Government will not simply tell you how much expenditure they are going to incur. Government in the budget will also tell you how much money they are going to collect in the form of receipts or incomes. Receipts or incomes. Do not use the term revenue here. It is slightly misleading. You will understand in a minute why. So government on one side will incur expenditures. Government on the other hand will also collect certain incomes or receipts. Example, government might simply impose taxes such as corporate taxes, GST, income taxes, customs, cesses, surcharges, etc. and collect this particular money, which is nothing but the part of receipts or incomes. Is it the only receipt? Absolutely no. There are many more. We will have a look at it later. But apart from this, there is one more term that I have written here, FRBM, Fiscal Responsibility Budget Management. Under FRBM document, government will simply provide data to the parliament, that is to all of us, as to how the government of India plans to control deficits. How does government of India plan to control the debt, etc. Right? So that is the importance of FRBM document. Now how the budget documents are prepared. Right? Let's say on the first working day of February, you see that the finance minister will be standing on the floor of the parliament and the finance minister will keep on reading a document. Right? Earlier they used to have physical copies of the budget documents. Now for the last couple of years, even that has been discontinued. It is a green budget. They'll simply read it out from a tablet like this. But either they are holding the physical hard copy or the tablet, doesn't matter. How did they arrive at this particular decision or let's say expenditure pattern as such? Basically the process that is followed is like this. First and foremost, you will have to remember this. You will have to remember this. And in fact, out of all these particular steps we are going to discuss now, this is the most important step. That is, who is responsible for the preparation of the union budget? And I am using the term union budget here. Please remember this. Why? Union simply represent to central government. Can the states also have their own budgets? Of course, yes. State governments also have their individual budget. So rather than saying simply budget, some of you might get confused. Right? Understand this. Even if you get confused, don't worry. If I use the term budget, I am talking about union budget, central government budget, not the state government budgets. So whenever the budget preparation is done, which is the authority which is involved? It is the Ministry of Finance. It should not be difficult for you. You will basically look at it and say, sir, what is this? You are simply testing us now. Yes, of course I know it is a Minister of Finance. Otherwise, who do you think will prepare a budget? Minister of Human Resources and Development? Of course no. Minister of External Affairs? Of course no. Minister of Defense? No, it has to be Minister of Finance. Absolutely correct. No doubts. But within the Ministry of Finance, which is the department? Because every ministry is divided into departments like this. Within the Ministry of Finance itself, there are 6 departments. Which is the department? It will be Department of Economic Affairs, DEA, Department of Economic Affairs. Now, is it the end? Is the whole Department of Economic Affairs responsible or let's say is involved in the preparation of the budget? Absolutely no. Within the Department of Economic Affairs, there is a budget division. There is a budget division. This particular budget division is responsible for preparation of the budget. Some of you will get confused. Yes, sir, what kind of division are you providing? Very difficult. Don't worry. Okay, can you imagine the Indian map? Right, there is an Indian map. Indian map is divided into states and each of the states are divided into districts. Apply the same logic to this. Whole government is there. Government is divided into different ministries. Ministries are further divided into different divisions or let's say departments, and these particular departments are basically divided into divisions like this. So if the question is which division is responsible for the preparation of the budget, you should say budget division. If the question is which department is responsible for preparation of budget, Department of Economic Affairs. And the third one is very straightforward. They will not ask you, even if they ask you, that's a lollipop question. Please don't make a mistake there also. Done? So first step, the budget division will prepare a document, that is budget circular, and they will send this particular circular to all the ministries, all the divisions, etc. Why this particular process is followed? How will the finance minister come to know that you require, let's say, 1 lakh crore rupees? Let's start a circus here. Imagine you are the finance minister, I'm the health minister. Again, imagine, right? Now, how will you come to know how much money I need to spend, let's say, for a particular scheme? How much money would I require for development of infrastructure, etc.? You will come to know if you ask me. That is exactly what the government of India is doing here, or finance ministry is doing. They will send a circular, budget circular, to all the departments or all the ministries. Now, individual ministries will provide their demands to the Ministry of Finance. All of these demands will be evaluated or estimated. Then the finance minister, along with these particular, let's say, the heads of the divisions or the departments, will come together, prepare a document, and this particular document will be given the sign by the finance minister. Once the finance minister basically puts a sign on this particular document, it becomes a budget, and we say that budget documents are ready. Some of you might be thinking, sir, how do I come to know all of this? Yes, in the flow chart, very nicely the chart is given, but how do I come to know where the budget documents are ready? I'm a layman, I'm an Aam Aadmi. How do I come to know? Very simple. Keep on watching, keep on reading the newspaper. Next year, just before the budget is announced, or let's say before the budget is presented in the parliament, generally 10 or 15 days before that, there is a ceremony which is conducted by the Minister of Finance called as Halwa ceremony. Halwa ceremony basically indicates that the budget documents are prepared. Only thing that is left out is presentation of the budget in the parliament. Done? Now, once the budgets are prepared, what is the process? We will require the prior recommendation of the President of India. Once the President of India gives the recommendation or agrees to the recommendation, the documents, budget documents, will be laid on the floor of Lok Sabha by the Finance Minister. After the presentation of these particular documents, for the next couple of days, I am using the term next couple of days because please understand this, the time period is not fixed. Generally, the government is the decider over how many days the discussion has to happen, for how many days the standing committees will be given the time, for how many days the voting will take place, etc. The decisions are taken by the government. So for the next couple of days, 2 or 3 days, there is a general discussion over the budget. The concept of general discussion is whenever the ministries will submit their demands, I repeat, whenever the ministries will submit their demands to the Ministry of Finance and these are allocated, funds are allocated, there is a technical term called as demands of grant, DOG, demands of grants. Now these particular demands of grants are arranged, and please understand this, these particular demands of grants are not discussed in the general discussion. In the general discussion, which will happen for a couple of days, the representatives of different political parties, opposition parties, will be given a chance to weave their or give their viewpoints regarding the budget documents, or let's say the presentation of the budget. And as usual, the members of opposition parties will keep on saying that this budget doesn't have anything for, let's say, recovery of the economy. It doesn't provide anything to address the issue of black money in India. It doesn't have any reforms to address poverty, etc., etc., etc. So that is the scope of general discussion in the budget. Once done, now the demand of grants will be allocated to different standing committees. There are 24 standing committees. Total number of members in each of the standing committee is 31. Out of that, 21 will come from Lok Sabha, 10 will come from Rajya Sabha. After this, once the standing committees will have a look at the demand of grants, they will submit a report to the parliament. Now, each of the demand of grant will be taken up and there is a detailed discussion on this particular demand of a grant. Basically, they will say that whether the expenditure that has been demanded to be withdrawn from the Consolidated Fund of India, either this is correct, if not, have a detailed discussion, have a voting, try to reduce this particular number, etc. That is basically the process of discussion on individual demand of a grant and voting upon these particular demand of grants. Once the voting is done, the government will basically consolidate all of these particular demand of grant. Now this is called as an appropriation bill. It will be passed by the Lok Sabha, sent to Rajya Sabha, then passed from Rajya Sabha, sent to President of India, who shall give the assent. Now the government of India is free to withdraw the funds from the Consolidated Fund of India. And after this is done, the finance bill will be taken up for detailed discussion as well as voting upon this particular finance bill. This is generally how the budget documents are prepared and passed, and now the government has money to spend and achieve the objectives, or let's say the target that they have actually set up. But more importantly, under the concept of economics, this is where the pure economics will start coming in. The concept of division in the budget. The budget is divided into two accounts. I'll repeat it, the budget is divided into two accounts. One side is called as a revenue account and the second one is called as a capital account. Revenue account and capital account. Revenue and capital account again are divided into two parts each. Revenue account has revenue, expenditure, R stands for revenue by the way. And apart from this, it also has revenue receipts. Same, apply the same logic to capital. Capital expenditure and capital receipts. Why do we divide the accounts into four types like this, or why the whole budget is divided into four types? How do I differentiate? In fact, if you check the examination paper or civil services mains paper 2021 by the way, the question that was asked in UPSC mains was exactly this. Write a note on the revenue, expenditure, revenue receipts, capital expenditure, capital receipts. I'm just paraphrasing the statement. Whatever the question was, it meant this. How do I divide? What is the basic idea here? Whenever you talk about revenue, either revenue expenditure or revenue receipt, it basically refers to the expenditure that is incurred by the government or the income that is earned by the government in day-to-day course of operations. The day-to-day operations which are conducted by the government, the day-to-day activities that are conducted by the government, in the course of these particular activities, whatever expenditure is incurred by the government, whatever income is collected by the government, these are referred to as revenue expenditure and revenue receipts, right, respectively. In the context of revenue expenditure, you have expenditure, let's say in the form of welfare, expenditure in the form of pensions, interest payments, subsidies, etc. In the context of revenue receipts, you have receipts or the income in the form of tax receipts, non-tax receipts. Right? So these are generally the divisions under the concept of revenue head. Now if you want to understand a bit more, the basic idea is, in the context of revenue head, there is no association with assets. Remember this. These neither create or reduce assets. Right? I'll repeat it. Revenue, expenditure, revenue receipts, these are no way associated with assets. These are neither associated with creation or reduction in the asset, nor are they going to create or reduce the liability of the government. That is the definition of revenue side in the budget. What about the capital side of the budget? Simple. Capital side of the budget, they are associated with assets, they are associated with liabilities. It has to be associated with one of these, assets and liabilities. For example, under capital expenditure, government will spend on infrastructure. Agreed? Government will spend on infrastructure. It's a type of capital expenditure. Creation of assets. Government will give loans to state governments and union territories, again associated with assets and liabilities. On the context of receipts, government will issue bonds, borrow from the market, or government will borrow from international agencies such as World Bank, IMF. All of these will be kept under the concept of capital receipts. In addition to this, the disinvestment receipts. The disinvestment receipts are again kept under the concept of capital receipts itself. Why? Because the disinvestment receipts are associated with sale of assets. Government will sell Air India, collect money. Government will sell part of the ownership in the LIC, collect money. So assets are being sold, assets will come down, so government will collect money. That is the basic idea of the capital receipt itself. So this is a division under the budget accounts. Now, having looked at all of this, another very important component within the budgeting of the government is the deficits in the budget. What kind of deficits are there? I have written 4 very important deficits here: revenue deficit, effective revenue deficit, fiscal deficit, and primary deficit. If you look at the budget documents, let's say next year budget documents, these 4 deficits will be mentioned. What is the revenue deficit? Under the budget, what we have done is, earlier we have divided the budget into 2 parts and we have given one division, that is the revenue side or revenue account in the budget. And the revenue is again divided into revenue receipts, revenue expenditure. Revenue receipts and revenue expenditure. So if the revenue expenditure is higher than the revenue receipts, that is called as a revenue deficit. I repeat, if the revenue expenditure, that is the expenditure under the revenue head, if it is higher than the receipts or the incomes earned under the revenue head, that is called as a revenue deficit. Does India have a revenue deficit? Of course, yes, we have been having a revenue deficit, and that's a problem. That's a problem. Why? Please understand this. Whenever we are talking about revenue head, are we creating any assets here? Very simple. Are we creating any assets under the revenue head? Absolutely no. But when you talk about the capital head, is there a creation of asset under this? Is there a creation of asset? Of course, yes. Under the capital expenditure, one way they are going to incur the capital expenditure is by investing in infrastructure. So under the capital head, there is creation of asset. But if you have a deficit on the revenue side, what does it mean? Your expenditure is very high and you are not creating any asset. So that is the reason I say that this is a problem. In fact, when you talk about FRBM documents, fiscal responsibility and budget management documents, the documents had put a target of reducing the revenue deficit to 0%. We have not been able to achieve it. We are still struggling to achieve a revenue deficit of 0%. Next one is effective revenue deficit, ERD, effective revenue deficit. What is this effective revenue deficit? If you look at the revenue side in the budget, let me go back to the previous picture here. If you look at the revenue side of the budget, under revenue expenditure, there is one expenditure called as grants for creation of capital asset. Grants for creation of capital asset. GCCA. This in short is written as GCCA. What is this grants for creation of capital asset? First and foremost, grants means what? One-sided flow. For example, if I come to you, just a hypothetical example, don't say, sir, how can you do this? Hypothetically, if I come to you and say, please give me 100 rupees, I will give it back to you. It simply means I am taking a loan from you. I am borrowing from you. But if I come to in the second situation, if I come to you and say, give me 100, right? I will not give it back to you. It's not a loan. You will simply give the money, forget about it. So the second example that I gave is nothing but a grant. The government will give money, doesn't recollect. Whereas the first example that I gave was basically the borrowings done by either the government, state governments, etc. Borrowings essentially means what? There is a component of repayment involved. So whenever you are talking about grants, no repayment, done one-sided flows. Second, this grant deals with what? Creation of asset. Now some of you will basically point out that, sir, earlier you said anything related to asset should be kept on capital side, but you have written this on the revenue side. You are wrong. I'm not wrong. The reason that GCCA is kept under the revenue side is very simple. If the government spends the money directly on development of an infrastructure asset, they will classify this under the capital expenditure. But in case of GCCA, the central government or union government is not spending the money directly. Rather, the union government or the central government is giving this particular money for development of infrastructure to another agency. Let's say they will give the money to entity owned by the state government, or let's say the state government itself. So that authority to whom the money has been given, they are the ones who are going to spend this particular money. So because the union government is not directly spending the money, they will not keep it under the capital side, rather they will classify this under the revenue side. Having said so, the criticism or the concern related to this is very simple. Either it is spent directly by the government or by the states or any agencies, doesn't matter, it is associated with asset. So if it is associated with asset, it should not be kept under the revenue side, it should be kept under the rather capital side. That is the reason the EID, which has been introduced many years ago, or let's say a couple of years ago in case of India, at post 13 and 14, the concept says that whenever you are calculating revenue deficit, you should not include GCCA. I repeat, whenever you are calculating revenue deficit, you should not include GCCA as a part of revenue expenditure. So what we have done? In the effective revenue deficit, we have subtracted, we have basically withdrawn whatever money has been spent by the government in the form of GCCA, and this is a purified version of revenue deficit, hence called as effective revenue deficit. Next, the most important one, fiscal deficit. The most important one is fiscal deficit, by the way. Fiscal deficit basically represents market borrowings of the government. Fiscal deficit represents market borrowings of the government. Right? What do you mean by borrowings of the government? Very simple. Government has to spend more money compared to how much money they are earning. I'll repeat it. Government has to spend more money compared to how much they are earning. For example, just a hypothetical example. Imagine your income is 1 lakh rupees per month. 1 lakh rupees per month. But your expenditure is 1.5 lakh rupees a month. Is it okay? Some of you will simply say, sir, this is not possible. It is possible, and many of the people actually experience it. So your income is 1 lakh, but your expenditure is 1.5 lakh. How do you satisfy this extra expenditure? You will simply borrow from the market. Does it make sense to you? You will simply borrow from the market. One way, sir, I will reduce the expenditure. Very good if you can do that. But you are talking about the government. Can the government reduce subsidy payments, welfare payments, pension payments, etc.? Very difficult. That is the precise reason generally why we have a revenue deficit this side. And because the expenditures are very, very high compared to the incomes, government doesn't have any option but to borrow from the market, which is referred to fiscal deficit, or which is nothing but fiscal deficit. But how do I write it? How do I put it in the formula form? The total expenditure of the government minus the non-debt creating receipts, NDCR, non-debt creating receipts, meaning what? Have a look at this. The receipts are of two types. Understand this? The receipts are of two types. One receipt is a capital receipt and the second one is revenue receipt. In case of revenue receipt, go back to the basics. Does it create any liability? Absolutely no. Whereas in case of capital receipt, there is one type of a receipt, that is government borrowings. Government borrowings, because capital receipts are multiple types. There are multiple components within the capital receipts. One of them is a government borrowing. So when you say borrowing, you are in a debt. Is it okay? When you say you are borrowing, you are in debt. You are supposed to repay the amount. So whatever is the total income, excluding this particular borrowing, it is referred to as non-debt creating receipts. I will repeat it again. Whatever is the total income or the receipts earned by the government, except the borrowings done by the government, it is called as non-debt creating receipts, NDCR. And difference between total expenditure and NDCR will give you the borrowings itself. For example, if government is collecting, let's say, right? 100 crore rupees, except borrowing. There is no borrowing as of now. Government is collecting 100 crore through the income taxes, corporate taxes, excise duties, GST, etc. But on the other hand, government is supposed to spend 120 crore rupees. Expenditure is higher than non-debt creating receipts. In that situation, what does the government do? Government will simply borrow 20 crore rupees. That is the concept of market borrowings, in simple terms, fiscal deficit. And finally, primary deficit. Right? What is this idea of a primary deficit? In the primary deficit, we try to calculate how much part of the borrowings actually is in the form of, let's say, interest payments, or shall be used for interest payments. That is basically your borrowing money, but how much is your liability in terms of repayment of interest or payment of interest. Sir, why does the government pay interest here? Simple reason is that government has borrowed money in the last 2 years. Let's say hypothetically. In fact, every year government borrows. Government has borrowed money and government has to repay this particular principal amount. But before they repay the principal amount annually, they are supposed to pay interest amount. They are supposed to give the interest because you have borrowed, you have taken a loan from the market. So the interest payment will be subtracted from the fiscal deficit. That is the concept of primary deficit. So these are the 4 types of deficits which are generally mentioned in the budget documents. Earlier, in fact, we had different types of deficits such as budget deficits. We are not calculating that. We had monetized deficit. We are not using that. Of course, there is a concept of indirect and direct monetization. Direct monetization with the passage of FRBM has been discontinued from 2006. Done? So these are the various aspects related to government budgeting exercise. Let me take up certain questions from your side. What is off-budget borrowing? Off-budget borrowing simply means whenever the government whenever government wants to spend money, go back to the basics here, they need to take the approval of the parliament. Agreed? They want to spend money. Government wants to spend, let's say, 100 rupees. They need the approval of the parliament. But rather than taking the approval of the parliament, then taking the money from the consolidated fund of India, what government is doing here is, government will tell one of its agencies, for example, let's say Food Corporation of India, to borrow from the market 100 rupees. Let them borrow 100 rupees from the market. And this particular 100 rupees will be utilized or spent by Food Corporation of India. So when FCI is borrowing from the market, are they taking the approval, permission of the parliament? Absolutely no. This is basically the concept of extra budgetary resources or off budget borrowing. What are assets? Assets, basically understand this. Assets are the ones which are created by us. For example, I will invest a certain amount of money and create an asset. For example, I might create an asset in the form of, let's say, road. I might create an asset in the form of, let's say, bridge, tunnel, etc. And whenever you create an asset, you expect returns from these particular assets. Done? Do salaries, pensions and subsidies do not come under liability of the government as it is liable to pay pension, salary timely? Please understand, these are liabilities, but they will come under the revenue expenditure. Liabilities in the sense, please understand this, these are the liabilities of the government on day-to-day basis in the normal course of business. Right? Revenue means what? In the normal day-to-day course of activity, whatever is the normal activity of the government. If they collect money during that, it becomes a revenue receipt. If they spend money during that, it becomes a revenue expenditure. Okay, so that's it from my side. I hope this particular session was useful for you people. If you like these particular initiatives, please hit the like button. And if you have not subscribed to Byjus Exam Prep, kindly do subscribe. Thank you. Have a great day.